The following is a presentation of TFNN. Live at TFNN, The Money Masters. Now, your Money Masters, Tom O'Brien and Steve Rhodes.
Welcome to the Money Master Show, folks. It is Monday morning. The Dow is up 25 points right now. S&P is up 70 cents. Composite up 12. Small caps up about $2.22. And Mr. Tom O'Brien is out buying real estate. That is a beautiful thing. Go to the homepage of TFNN.com. Under breaking news, you will see the white paper, the bull market in Florida housing. Over on the right-hand side, you'll also see the Tiger Real Estate Opportunity Fund. Folks, I suggest that you check both of those things out. See if you are a qualified investor. There's plenty of information inside the white paper that Tom did out there. Also, if you are a subscriber to any of our services, or maybe you're just sitting on the fence and you're thinking about subscribing to some of the great services, newsletters that we have here at TFNN, maybe you want to join the Tigers Den out there. Now is our Tiger Dollar promotion. It runs through the 19th, so not much longer out there. No time to wait. Also, what you will get is we make a contribution on your behalf to the Salvation Army out there. It's either a 5% or a 10% contribution. If you invest $500 in Tiger Dollars, you'll get a 5% contribution. Anything under 1,000 is 5%. Anything over 1,000 is a 10%. So you're going to get 25% on your money. That means we take your money, we up it by 25% out there. Plus, you get a 5 or a 10% contribution, letter in your name, tax deductible, the whole bit out there. A great way to help people, whether you need the tax donation or not, instead of just coming out of the grocery store and putting a few bucks or whatever change you have in your pocket in the Salvation kitty. In fact, you can do that too, but why don't you invest it in yourself by just taking a nice chunk and getting some Tiger Dollars and utilizing the wonderful services that we have here at TFNN. As we continue taking a look at the markets here, King Dollar back 7 ticks right now. Gold up $8 and change out at $17.14. Silver up 18 cents right now out at $33.32. Light sweet crude flat up 15 ticks right now, trading out at $86.08. The DAX has turned slightly green. It's up $1 and change. The FTSE up $5. In Asia last night, everything was green out there, but that's not the total story. The Nikkei gapped up and traded lower all night long out there. So the Nikkei was up $6.36. Our call-in number, 877-927-6648. As far as what's moving here in the markets this morning, Google to the upside, up $4. Chipotle, CMG, the ticker symbol, up about $3.68 out there. Concur Technologies, CNQR is the ticker symbol. They're up 5% here this morning. Baidu is up $2 and change. Pharmacyclics, PCYC, up $3 and change out there. LinkedIn, LNKD, haven't looked at that equity. Maybe we'll do that here today. That is up $1.20 or so. F5 Networks, FFIV, up $1 and change to the downside. Priceline leading things to the downside. They're having a little sale. The sale is in their stock out there, moving lower with conviction, with volume, off $28 right now. Apple off $4 and change. VF Corp, VFC, the ticker symbol, off 1.6%. Sturm Ruger, the gun company out there, off about $2.50, about 4 7/10% out there. Deckers Outdoor, DECK, off 4% here this morning. Under Armour, UA, off about 3%. Six Flags, the entertainment company, off $2 and change. Expedia, Diamond Foods, Apache, Gap is down about 3% here this morning. Dick's Sporting Goods, looks like all the retailers or sporting goods companies struggling out there in the early hours. Let's go take a look at the indexes and see what it is that we have going on here. The Dow really being the lead dog out there. During the morning show, the 9 to 10 o'clock show, we were taking a look at IBM, Chevron. We didn't look at 3M. We'll do that. ExxonMobil and McDonald's. We're going to just pick apart the at least the top 9 stocks inside the Dow, because the top 9 stocks represent 52%, 51.58% of the weighting structure inside the Dow. That's all you need to do is take a look at those equities to understand if they're completing patterns, either to the upside or how much more room they have to go. If we take a look at the Dow, what you're looking at is you're looking at an ascending wedge pattern out here. That is the red little triangle that we are looking at. That is a bearish pattern, by the way, folks. Even though you've got the market moving up, the typical outcome of this pattern here is to the downside. You can see coming off of the lows here on November 16th, that moved more than a 45-degree move. So a pretty strong, very strong, powerful move. Of course, that 4-candle pattern gave us that indication here. That was the candle pattern from the 14th through the 19th out there. That was our first set of clues. And but the angle of ascent up here, really, quite frankly, is significant enough that if you're a bull, you really actually, even though you might not want to see it in your equities, you actually do want to see a retracement here and get that angle more on a 45-degree. In fact, more like this angle that you're looking at coming off of the October 4th lows out there. That's the type of bullish angle that you are looking for out here. So you've got an ascending wedge. Again, they typically resolve themselves to the downside. That doesn't mean that the Dow can't travel higher here for another few trading sessions. The Dow really also moving into, eventually will be moving into horizontal resistance if it keeps up this powerful move that it has had over certainly the last couple trading sessions, especially when King Dollar was also moving to the upside. That horizontal resistance really being the swing point of November 6th out there. And the Dow, the number would be 13,290.75. That would be a test of November 6th. It may not make it all the way up there, which you can see if I were going to draw a line, and I'll just go ahead and do that. I will draw a line coming across the screen here. This more likely the area of resistance, horizontal resistance of the Dow. So that's the black horizontal line. You can see that that really would be probably right around the 13,114 level. The Dow at, I'm sorry, that's wrong. That would be at the level of about 13,000. The heck am I looking at here? The close. Oh, thank you. 13,245. A little dyslexic there. Not that that's a problem. But 13,245 more likely the target. You've got the Dow at 13,182 out there. Let's keep looking at. Also, let's just take a look at the retracement level. I would be remiss if I didn't do that. Let's go from the swing point high of October the 5th. All the way down to the swing point low that came in on November 16th. What you can also see is the Dow should be running into some resistance right at about the price point of 13,207. Again, the high today, 13,189. Why do I say that? Well, because that is sweet 618. That is the 618 retracement of that high down to the low out there. Let's keep looking at the indexes, see what other patterns we've got here. Russell 2000 is the second up on the screen here. The Russell 2000, has tried to get back inside the trend. That trend going back to the October 4th lows out there. Attempted to get back up there on November 29th, on the 30th, on December 3rd out there. Looks like it wants to make another run for that area. Trading out at 824.46. That's up $2 and change. Of course, what we can also see is it's also really in a horizontal resistance area. That could either be, quite frankly, really the highs, I would say, good horizontal resistance at 826 and a little bit of change out there. 828.41 is the 618 retracement. Be nice, actually, to see just a big move up. That might be an exhaustion move. We're certainly not going to see that here. At least we're not seeing that this morning out there. Just one more spike up there before it gives it up. If we go take a look at some of the other indexes, let's go take a look at the S&P 500. Let's look at the numbers on the S&P. S&P traveling also into a resistance area. You've got the diagonal resistance. That's the trend line coming off of October 4th out there. You can see the S&P has been flirting with it here for at least the last week, ever since December the 4th, as it tried to get back up in that level. Also really traveling inside the swing point here from November 6th. Now, the swing point low on the S&P is 1417.26. It's at 1418.01 right now. That is what it is trading at. It did close above that. I just realized that as we were coming in to the 10 o'clock show here, as I was drawing the line, the horizontal line across that. You did close, or the S&P closed at 1418.07. So you get another close today, let's say, above 1726. Well, number one, it sets up a test of the high of Monday, December 3rd, last Monday, 1423.73. But what it really does, it really sets up the possibility of the test of the November 16th area, 1433.38. That all along was a long-term target. But you can see here, it's in this little horizontal resistance. It's been that level since November 29th out there, so it's getting close here. Not an overbought or oversold condition at all, so it's got room that way in order to be able to run out there. Let's keep looking at the indexes out here. Oh, let's go take a look at the big doggy. That is the New York Stock Exchange. New York Stock Exchange trading out right now at 83.10. That is down, it's really down 5 points. No big shakes out there. However, New York Stock Exchange, folks, the wider breadth of the marketplace out there, that wider breadth has shown nothing but bullish moves. It had one bearish move. It had a key reversal day. That was on December 3rd. That was last Monday. That area was finally rejected on Friday. Friday's close above that key reversal day of December 3rd. That high was 82.98. You got a close of 83.14 on Friday out there. The 0.786 retracement on the New York Stock Exchange, $83 and looks like 83.36 and maybe a little bit of change out here. This, folks, this is your key. This is your key index right here is the New York Stock Exchange. When this gives you the bearish sign, because this really has been the strength out there, I mean, take a look at where it is trading at, the 83.09 level, to get up to its swing point from October 18th. That's only 84.17. It's really not that far away. At the 0.786 retracement out here, not a lot of bears in sight yet on the New York Stock Exchange. This is the one you want to make sure that you are paying attention to. Or I'll pay attention to it for you. Just tune in every day. Let's go take a look at the semiconductor index, the SOX, and see what it is doing. That is trading a little bit higher here this morning, now to 381.25. It is trying to make a run for its resistance area. It doesn't have that much further to go, up at the 384 level. That is horizontal resistance out there. So it is traded at 381, and as I said, about 384 is the level where it wants to trade to. So it's kind of telling you there's a number of signals here that the market is getting ready for a pause or a pullback. You know, you don't know which one it's going to be, and you won't know until you start to see volume out there. But you can see a number of things moving into resistance zones. If we take a look at the NDX 100 out here, the NDX 100 trading down. Is it trading down? No, trading up 3 points. So a flat session out here. The NDX 100, this did travel into its resistance area, which was the November 6th candle. Got up there on December 3rd last Monday, gave it up. The NDX 100 is weak out here. You can pay attention to weakness, but I say pay attention to things like the SOX index, pay attention to the New York Stock Exchange. They likely, and the Dow, I would say, because the Dow has been the lead dog out there, they are going to be the ones that are going to give you signals as to whether or not this market wants to motor on higher or wants to begin a pullback out there. 877-927-6648. We'll be right back, folks.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Happy holidays from TFNN. Our most rewarding Tiger Dollar sale is back this December at TFNN. Normally, we offer only a 10 to 20% bonus on Tiger Dollar purchases, but through December 19th only, when you purchase Tiger Dollars to spend on any of our products, you get a 25% bonus on your purchase, and up to 10% of whatever you spend will be donated to the Salvation Army in your name. You'll receive a personalized thank you letter directly from our local Clearwater Salvation Army administrator in appreciation of your donation. Tiger Dollars can be used on any of our newsletters or subscriptions, never expire, and are fully transferable. Take advantage of our most rewarding Tiger Dollar sale of the year right now. Visit TFNN.com for all the details and to make your purchase today. Happy holidays from TFNN.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks, to the Money Masters. We've got the Dow up 19 points right now. S&P flat. Composite up 7. Small caps up 1.5. We've got Apple down $4. Priceline is off $29, and we're going to go take a look at 3M. We have been dissecting and bisecting the Dow here, taking a look at the at least the top 9 holdings with inside the Dow structure. Why the top 9? Because they represent 52% of the weighting structure inside the Dow. We're taking a look at 3M out here. That is actually the number 3 weighting structure, 5.34% of the Dow. I think I would actually talk here. You actually have 3M here trying to get up above an area of resistance. It was the open window trying to be repaired today. That was the downdraft from October the 22nd out there. Of course, I think 3M is located in Minnesota, if I'm not mistaken, and I believe they have a cold blast of air that came through there. No wonder 3M is trying to repair that window. That'll be, if it closes above 91.50 out there, that will go ahead and repair that window. It has acted as a area of resistance. That level was tested on November 29th, rejected it. It was tested again on December 3rd, rejected it, tested again on Friday. Today, you got a nice little wide-ranging bar, 914,000 shares in only an hour of trading. That's going into 3.1 million shares. What this is really setting up is if 3M closes above 91.97 on more than 2.3 million shares, and it should have that kind of volume. What it will do is it will set up an A to B equals CD up. It'll confirm an A to B equals CD structure. That A to B equals CD 1-to-1 takes you to 94.84 out there. That'll get you back into the highs or into the October 8th level. Now, what we will do here, remember that number, 94.84. Let's go take a look at the weekly chart out here, because what is interesting is resistance is right up at the high of about 95.46. That is where on 3M we had a big, pretty large downdraft here. Wasn't the largest, but where the breakdown began, which was the week of July 29, 2011. That high, $95.53 out there. You can see that area, in essence, was tested back on the week of October 12th, October the 5th, and then October the 19th out there. Yeah, that is a resistance area. That, it looks like, where 3M is headed to. Speaking of the cold, let's go up to British Columbia to see if they are the culprits for that cold blast of air going through the Midwest. Our man Rick. Rick, how you doing this morning?
Hey, really good. How are you doing today? Now, actually, no, it's time for us to hit the beach. It's almost zero here, which would be 32 for you.
Okay, that's beach weather, huh? Hey, did you watch the football game last night, the Detroit Lions and the Green Bay Packers?
Oh, I did, yeah.
Do you like that football when they're just,
I love it.
When it's now the television cameras, because they're so good, it ends up looking a lot better than it probably really is if you're in that environment.
Yeah. Well, you know what? The funny part about that game is it looked like it was snowing the whole game. It started to lighten up at the end, but yet the field had no snow on it, so I wasn't sure what was going on there.
Yeah. God, you know what? I don't know. Well, you live up in the north, so you kind of like that cold weather. You must love that cold weather out there.
You know what? You just have to. You live with the cards you're dealt, right?
I go get a new deck. I lived with those cards for a while, and I decided I needed a new deck, and so I decided Florida was where that deck was going to be.
Well, and then if you're like the Fed and you're broke, you're just going to find another Monopoly game and start again.
Oh, I love it. It's not in my reach here, but I had talked about the Monopoly game a week ago or two, and I got a couple different emails from listeners out there, and they actually they sent me a photo of the instructions from Monopoly. And because we were talking, maybe it was you and I that were talking about it, right?
We were because
okay.
Because I use that scenario with people too, because like I know your country has a huge deficit. States have a huge deficit.
Yes.
Cities have. In Canada, we have a deficit, not like yours, but our personal debt is pretty bad.
Okay.
We have a lot of things going for us, but like we're not a bag of roses here either. So
maybe a better.
And of course, then you got Europe, of course, too. So
so was you and I? We were the instigators.
Yeah.
We were the instigators of the emails that I got. So I don't know if you heard it. So I got these instructions that were emailed to me, and it says that the bank. The actual instructions for Monopoly that you and I played as kids, the bank never goes bankrupt. It specifically says that if the bank runs out of money, just start writing IOUs, just start writing paper.
Yeah, well,
which is great, which is a classic.
Just to keep it simple, that's what I say with people. I say, okay, we're playing Monopoly, and I'm broke, and then you go to me, well, I got another Monopoly game.
Exactly.
How about we both get $10,000, and then you can keep playing? You know what I mean?
Exactly. 877-927-6668. We come back. We're going to go back to Rick in British Columbia. We'll take a look at the Qs. The Dow's up 18, S&P up 28 cents out there. The Qs themselves are up. The NDX 100 right now, trading out at 26.48.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back to the Money Masters Show. We're going back out to British Columbia to our man Rick. We're going to take a look at the Qs. So, Rick, how can I help you? What are you looking at?
Well, to be honest with you, I think they look pretty bearish. You know, I know you mentioned the NYA, and I have a hard time finding volumes with the charting services I have on the NYA.
Right.
But you know, when I put a 3-year weekly on the Qs, for example.
Okay, we can do that.
And you know, I know Tom likes to talk about the real price. Well, if you look at the real price, the most recent real price, that was in 8/8 of 11. So
yes,
August,
exactly.
August 8th.
Absolutely. Yep. Absolutely.
And, and you go a little more to the right on the chart, and you see that gap down there around 56.42. I think it was December 26th of 11. And we never did fill those gaps yet. And I'm just curious if we could bounce maybe a little bit more here, but setting up an ABC down or something. But I'm just curious on your take of that.
No, the Qs are absolutely where the weakness is, and it's really in the NASDAQ 100, and it's really all driven, it's primarily driven by Apple. Still, even today, with the amount of hit that Apple has taken, it still represents 17% of the NDX 100 out there. So
now, here's one thing about Apple, which I believe, I've heard, you hear a lot of stuff. But I hear a lot of people are selling for tax purposes, thinking the taxes will be higher. So a lot of guys are saying, and girls,
yes,
that the best time to buy Apple would be at the end of December, and I guess with settlement dates and everything like that, that wouldn't necessarily be the last day of December. It would, whatever. You know what I'm getting at, right?
Yeah, no, look, I think that, if you take a look at the sell-off, so that is certainly a possibility. I think, well, look, there clearly has been some tax selling, inside Apple. I mean, it is normal for folks to take a look at their portfolios and take a look at, tax structures or benefits out there. So just to do normal tax planning. And when we take a look at the dividends, that have been put out there, the early dividends that are being paid out there, some, a full year's worth of dividends, everybody really is, it just shows you the thought process behind, hey, if I have a choice of paying less in tax versus more, I'm going to choose, I'm going to be the economic person out there. So certainly for those folks that began selling anywhere between September 21st and certainly November 30th out there, those are folks that can buy back into Apple right after the beginning of the year, not have to worry about wash sales and things of that sort out there. So they may just simply buy back in. What we do know about Apple is that, volume-wise, let's say that that theory is correct. At least at this stage, the lows of November 16th need to be tested out there. The low of 505.75 on less than 45 million shares out there. But I think Apple, is really more reminiscent of right now, has more of the structure of what Microsoft did in 1999 when it made its highs. Because if you overlay the Apple chart on Microsoft, that's really the pattern that's being made out there. That's one of those things where you get a stock like this that makes such a high market cap up there. Most people don't believe, and Apple's a great company. I'm sure I haven't been in a mall in seems like forever, but their stores are always full. At least they're full here. I imagine they're full up in British Columbia too.
Well, actually, another one that really paralleled it, and you and Tom went over that last week, was Sony.
Yeah, Sony.
Remember that one?
That's right.
It was way up there.
Well, and what we talked about it afterwards. I think we even talked about this point on the air. When Sony was making its highs, that was when the Nikkei also was making its highs.
Yeah, that's the ticker symbol SNY, right?
SNE. Oh, SNE. SNE is the ticker symbol out there.
But you put along with a chart on that one, and it anyway, I want to sign off.
That being said, that's where you say the Qs look very bearish. They do. Apple looks very bearish, and if Apple takes out the swing point, it had volume coming into the weekly swing point. It sets up a really large A to B equals CD down.
400. And 4.25.
Yeah.
And if you look on a monthly volume, I forget if it's a monthly or what, but it actually broke the 400, 4.25 with lighter volume. So whether it goes there or not, another company just lowered the price target from 800 to 750 this morning. So anyway, I'm going to sign off. I just want to remind the Tigresses and Tigers to when you go short, watch out for dividends, because some of these stocks have moved their dividends back, and you get caught with that. So
yes, no, absolutely, yeah. And so you get a lot of folks. There must be a study out there. I meant to actually look for it over the weekend. I just wanted to see how much Essence has been pushed forward from a dividend standpoint, just to understand the tax benefit to folks out there. It's huge. It's huge. Yeah. So there must be a study out there.
But if you're going to go short some of these stocks, check to see if they did push their dividend back, because, then you got to pay the darn dividend if you're short, right?
Yeah, absolutely.
All right. Thanks, man.
Okay, Rick. As we come back here to the market, so you got the Dow up 24, S&P's flat, and we were looking at the stocks with inside the Dow out here. So we're looking at 3M. So 3M really setting up a run, it looks like, on the both the daily and the weekly into the price area somewhere around the 90, 94, 95, $95 level. It's at 92 right now. So we've already been through, I believe, the top 5 stocks of the Dow. Let's go take a look at number 6 out there, which is Caterpillar. Caterpillar, the number 6 weighting inside the Dow. We'll go back and take a look at those top 5 as well, just to see how they're doing here maybe before the show is out. If we take a look at Caterpillar not really doing a whole lot right now, traveling down into the last area here where it looks like there's a little bit of a gap, which was November the 7th. That high is 87.23 out there. Yes, there is about a 7-cent gap. That area was tested on Friday, closed back below it, so it's possible that that's a little bit of a resistance area. So you got really two resistance areas here in Caterpillar. The one in red is the earlier one from the gap on November 7th. That's still in play. If Caterpillar closes above 87.30, what Caterpillar will do will run up to the larger resistance area, which is really going to be the high of November 7th, the high of November 2nd out there. Maybe it is the open of September 25th. So it doesn't look like the number 6 weighting inside the Dow has much further to run out there. It does have a little bit further to run, but doesn't look like it has much further to run in the marketplace. When Rick was on, I know he follows the Bradley model out there. He's aware of it. You do have the last major turn date of the 2012, which is December the 12th out here. So 2 more days. Today is December the 10th. You've got a major turn date in the Bradley. Now, in the Bradley model, just because it is marked as the 12th, it usually doesn't turn necessarily on a dime out there, but I just thought I would make folks aware of that. So we've been through, let's see, 3, 4, I've got 7. United Technology is number 7. UTX is the ticker symbol. The weighting structure of United Technology is 4.73% of the Dow. We can see here that United Technology is trading inside the swing point from September 14th. So United Technology showing some strength for sure, and it looks like it is not above the downdraft. So let's identify the area of resistance that is out here that was set up by this large volume candle to the downside. It's not a swing point, but it is why you want to be paying attention to volumes in the marketplace out here, even if they're not at swing points, because they are just simply natural supply lines. And so if we take a look at that on United Technology, that is going to be the September 21st candle. The high is 81.35, 12 million shares. You can see United Technology got up to that level on December 3rd, but it did it with 3.3 million shares going against 12.7 million shares. Did it again on Friday with 3.7. That 3.7 going against 3.3. So far today, 672,000 shares. So not a bad volume day for United Technology, but it is struggling with that supply line. Unless United Technology rejects the actual swing point low, let's go ahead and mark that here on the chart. That is going to be your low of the September 14th candle. That low is $80.68. If it cannot reject that low, it may just simply travel sideways here, but would want to go ahead and get the energy to go tag the high of September 14th, and that is at 82.50. It's not there just yet. It is inside that supply line. Get it closed back below 80.68, and the work for United Technology to the upside could be over here, and that is the number 7 waiting inside there. Boeing. Boeing is, what's the ticker symbol on Boeing? BA, I believe. Is that Boeing BA? Is that the ticker symbol out there? I believe it is. So let's go take a look at Boeing. That is the number 8 waiting inside the Dow here. BA. I believe that is the Boeing ticker symbol. Trading out right now at $74.84 out here. Let me just make sure I don't want to give you the wrong ticker symbol. Yeah, that is Boeing. So let's go take a look at Boeing, see what it is doing out here. Let's get rid of the lines here on the screen. So Boeing, let's see what it's trading into. Boeing also trading into the September, traded into its swing point high. Let's see, July 26th, 2012, 75.96. So that is the swing point high. Let's draw a line on the bottom because we're trading, or Boeing is trading inside that right now. And we'll just go put the volume line on the screen here, see if it is moving up into that area with volume. Come on, line tool to work for me. The volume at that swing point happens to be, did I already say it? 4.9 million shares. So you're up into it. You came up into it on Friday with 3.7 million shares. It did on the 27th of November. Did get in there with 5.3 million shares. That would suggest that Boeing wanted to go up there and test that swing point high because you were coming into it with accelerated volume. closed on the 27th at a price of 74.54. So closed inside that swing point, and then it's just kind of hung out here, back inside it on Friday with lighter volume. That doesn't as much concern because you already were tagging it with higher volume. It says that Boeing wants to go up and test the July 26 high, 75.96. Boeing is the number 8. So Boeing has a little bit more work to do to the upside. Let's see, what is this also traveling into? I don't know if necessarily that supply line that, is doing much out there. That's where Boeing is headed. Let's go take a look at Travelers. TRV is the ticker symbol. That is the number 9. That is the number 9 weighting inside the Dow. That's all we need to do, really. We can do number 10, though, which is Walmart. So TRV is the ticker symbol. Why do I say that's all we need to do? Because that, folks, would represent 52, those top 9 stocks of the 30, representing 52% of the weighting structure. Now, the work to Travelers here, you had a high volume high, October 18th. That was tested here last week. And that was a result of an announcement, I believe, of either buyback or a dividend, being moved forward. You had the high volume high, though, October 18th out there. That was 6.3 million shares. This gapped up with 5.8 million shares, so the swing point has been tested. Well, the swing point high wasn't tested. Still traveling inside How about that? Travelers traveling inside the swing point high. Let me just draw the line across the screen here to talk about a play on words. So you've got Travelers, October 18th, that low 73.21. It's at 73.33. May really want to finish its work. It should really go tag the high, which would be 74.70 out there. Not much left to go on Travelers. Coming into the swing point with some volume and letting off. I think that was about the buyback out there. So of the top 9 stocks, hopefully you were taking some notes on this. You should have been taking some notes because it would help you to gauge, because the real strength in the marketplace, yes, I say it has been the New York Stock Exchange, most definitely, as an index, but it has been the Dow, which is obviously the lead headline in the markets out there, and it really has been the Dow that has been leading things here. So the Dow is probably going to be also what's going to be giving us a piece of information out there. The Dow, the New York Stock Exchange, the SOX, and then, as always, you can take a look at Apple, take a look at the NDX. Other things to maybe consider would be taking a look at the DAX. So let's go take a look at the DAX. Let's go see what the DAX is doing out here. The DAX is still trading above its most recent horizontal resistance area, which is potentially now starting to become support out there. And if that's the case, the DAX then wants to travel higher. That really, you'd be taking a look at the black horizontal line going across my screen, because that is a tested area of resistance. It held really going back through the time period of September 14th all the way to really just about now. So for months, that area, not that was tested each day for months, but you're taking a look at a longer term horizontal resistance area. What happens when you break a resistance area, folks, is it then can become support. The question becomes, does the equity, in this case here, does the index get back inside it, which would say there was a false break? Or the more that it gets tested and closes to the upside, the more you've got to say, something to think about, because the DAX broke out, even though the euro was a tumbling down. 877-927-6648, tumbling down right now in the market. You've got Priceline off 25 points, Apple down 3, Decker's Outdoor off a couple bucks. We'll be right back, folks.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll
you'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success, and it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. The Dow up 19 points right now, and absolutely stay tuned. Basil Chapman off of his world tour Thursday and Friday, teaching some of our Tigers about the Chapman Wave out there. We got Basil up from 11 to 12 out there. 2 days. He must have rested his voice over the weekend. I heard just simply a phenomenal course out there. Larry Pesavento today from 12 to 1, Daryl Martin 1 to 2, David White 2 to 3, Ken Shreve 3 to 4, and Tom O'Brien for the Tom O'Brien Show from 4 to 6. As far as what we can expect in the markets today, let's go. We've got Basil today from 11 to 1. Basil covering for Larry. So Basil he was just doing, there was a warm-up session, I guess, on Thursday and Friday, as he was doing probably about 8 hours or so worth of talking each day. So you got 2 hours of Basil today, so that'll be great. Now, what can you expect in the markets? Well, let's first go over to the currency market, see what it is that we have here, because here's where you would expect to find some energy. However, on the 30-minute chart here on the euro. You can see that the euro moving up into a overbought condition, overbought territory. That's just simply using the relative strength indicator the way that I do it. In fact, you can watch here last time that you were up in these levels here. That's where the euro began its sell-off, which was at about 4 in the morning on December the 5th out there. You can see as it gets into oversold conditions, it works its way sideways or it retraces up. You can see that occurring as it moved down into the December 6th levels. Now you're up towards the upper end. You certainly would not be buying the euro here. You would be taking a look at possibly selling the euro here. So expect this condition to be worked off. That means that you should see kind of a sideways move out here. That should, keep the markets here relatively flat or so. If we go take a look at the futures markets, let's go take a look at the 4 quadrants, the 30-minute charts out here. You can say each of them up near their overbought condition up towards the high end. Moving a little bit higher right now, but each of them also moving up into an area of overbought. That means that this little pop here, got the Dow up 31 points or so right now, should start to work its way off as well by either moving sideways or pulling back in the market. Up in the upper left-hand side, you've got the ES Mini that's trading out at 1420 right now. That's really trying to take on that pop and drop from Jobs Friday at the 9 o'clock session out there. Really the same thing going on in the Russell 2000. The Dow, which has been really the lead dog out here, the Dow moving on to a little bit newer highs, but the Dow here moving up at this moment here. Let me just put the little, come on, there we go. Just need to turn on my little study. And if we take a look at the relative strength out there, about 74. So moving into that overbought condition. And when we typically see that occur, we start to see moves sideways or pulling back. So that's what you should expect in the markets here today, at least on the intraday charts. Should see a little bit of a timeout, maybe coming into about the 11:30 session or so, 11:30 to 12 out there. And that, if we go back and take a look at, let's take a quick peek here at gold. You've got, we didn't talk about gold or silver, the metals. Right now you've got gold moving up into the 20-day and 50-day exponential moving average. Gold trading out at 17.16, both those averages at 17.17 and 17.90. That has acted, for whatever reason, as resistance zones. Silver, though, is stronger, a stronger metal out there. It's trading up above the 20-day. I expect maybe we'll see silver back below that level around 33.20 by the end of the trading session. Stay tuned, folks. Basil will be up next. I hope that you have a fantastic, marvelous Monday out there. Make it a happy day. It's been great to be back with you. It is great to be back at full health. Nothing like health, folks. Take care. I'll see you tomorrow morning.